Uh, I will start the meeting.
I'm here.
Alrighty, this is a meeting of the Town of Trumbull Pension Board for Tuesday, April 27, 2001. It is starting at 7:10 p.m. We have a quorum. And as we usually do, we like to turn the beginning of the meeting over to our investment advisor, the Byrne Company, with Lindsay and John Oliver here. So would either of you take it away?
Yeah, sure. I'll start, Lindsay, if that's all right, and then I'll turn it over to Lindsay to go through the portfolio. But let me just share some high-level thoughts about kind of what's transpired from a year ago till today. I won't go through the whole year because no one wants to hear about all of last year. But if we think about where we were at the end of March last year and where we are today, it's a very different picture. And what's that caused by? It's been caused by a few things, right? A lot of stimulus, low interest rates. We have the COVID vaccine, right? Most people have had a vaccination in terms of their second shot who plan on going. So, we have a reopening that's taken place in the economy, and we're coming off a very low base. So, we've had a lot of growth. Now, it's muted growth relative to what we want globally or, traditionally what we want for growth, but it's better than where we were last March, which was, minus 40% type thing in GDP, right? So, as we look across, can everyone see page 1 here?
Yes.
Okay, great. So, one of the things we talked about a lot the last couple meetings has been this extreme outperformance of growth stocks over value stocks, and mainly the technology stocks over the financials and more economically sensitive stocks. So, one of the things we're seeing here, and it's a small data point because it's just a quarter here. You could see the growth index up 0.9 that I'm highlighting, and you could see the value index up 11.3. So what we're starting to see in maybe the beginning stages of some green sprouts for the value side of the ledger. So thinking about energy, industrials, materials, cyclical, financials seem to be improving as we're going out now. There's still a lot of strength in the technology stocks. Amazon came out today. They had really exceptional earnings and EBITDA growth. So you're still getting positive momentum on the growth side. However, it would kind of, common sense would lead us to think that as the economy reopens, the stocks that have really been hampered down should perform better. And quite frankly, we're seeing that across the board. The small cap stocks are doing better. The mid cap stocks are performing better, and the value stocks are performing better. Meaning, usually when you see all the areas of the stock market performing, what you tend to see is a robust, solid equity rally. Whereas traditionally, when you see sell-offs in markets, what you see first is the small cap stocks sell off, then the mid cap stocks, then value, then there's a huge concentration in kind of the biggest stocks. So when you think about a market sell-off, it's kind of like fall going into winter, where the leaves are starting to fall off the trees and the weakest leaves are falling off the trees first. But what we see here is just a broad-based equity market rally, which still to us looks pretty strong. I think it's kind of clear that the Fed is going to keep rates low as long as they can to try and grow us out of the lack of growth that we're in. And if we look here, we can see one of the things that we've added to that started to improve really over the last kind of 6 months has been the international equities. So you could see where they made up for the year. They're 55.50 and then about 59 for emerging markets here. But really a lot of that came in the second half of the year. So, you're getting these rallies. You're starting to see a bit of it in Europe now, as they're a little more economically sensitive in terms of their index. They have a lot more cyclical companies, whereas in the US, we have a lot of the big tech companies. So we're seeing a little bit of improvement out of international markets, which we've added to. And then if we look, no surprise here, which we talked about, the fixed income markets really performing poorly, right? As we see interest rates go up and we have rates at a pretty low level. The bond portfolio was great in June of last year or March of last year, but as we look where rates are and the risk that we're taking to own high quality long only bonds, It seems like that area of the market's pretty risky relative to where it's been historically in terms of compensation and risk. So with all that, I'll take a pause. Does anyone have any questions or things I could comment on where we are today? Positive still in the equity markets. At some point, we're going to have to pay for the debt. And at some point, the ride's going to be over. But right now, none of our indicators look negative or are flashing yellow to us, except that valuations look like they're getting a little stretched, even by historical norms. But that's with interest rates being historically at 6%. So when they're at pretty close to 1%, you can command higher prices for stocks. And if these companies continue to deliver like this, it'll be justified for the time being. So I'll pause there if anyone has any questions. No.
I don't.
Okay.
I don't.
I'll hop into the portfolio. Here on this page, you can see for the last year, the portfolio up a little under 35%, up 3.3% for the quarter and 1.9% for the month. And I'll just touch base on this quickly and turn it over to Lindsay. One of the things we marked out here was on the fiscal year side, an important number we're looking at. And, some of the big changes we made in the portfolio were kind of post March. So we can see the portfolio from July to March, and hopefully this trend continues from an actuarial point of view. Portfolio up 20.47 kind of versus the corresponding benchmarks. And then the portfolio today up to 46.6 million from 43 million last month. So, a nice little bit of asset appreciation on the portfolio, especially from the end of June last year, and then also for the quarter. So kind of with that, I'll turn it over to Lindsay unless anyone has any specific questions for me.
I don't.
So as we always do, I will highlight the asset classes as well as their market values. But if there are any specific investments that you'd like myself or John over to review in detail, please just stop me and let us know. The total equity of the portfolio was 27,992,318. Oops, excuse me, 30,683,512. I apologize. I was reading the beginning value. That is 65.73% of the portfolio. The equities were up 5.85 for the 3-month time period, and for the 1-year time period, the equities were up 60.79% as of March 31st. The domestic U.S. equities were 21,220,094 of the portfolio at the end of March. That was 45.46% of the portfolio. For the 3-month time period, the domestic equities were up 8.53%, and for the 1-year time period, they were up 63.24%. Any questions on those numbers? Okay.
No, I don't have any.
If you'd like to turn the page, if you're looking at your own PDF.
Yeah, well, I would just add one thing. One thing we got this quarter and really for the last year-ish or so, just to dovetail into what Lindsay was saying about just the general equity performances, what we're starting to see are the managers who have a little more cyclicality in the portfolio start to really perform kind of better than their corresponding index. So we're getting good performance from the allocation just in domestic equities, but then also from some of the managers as well. So when we look at kind of the 1 year at 63% versus an S&P of 56, like that's pretty good. And it's kind of twofold. One is, the overweight to domestic equities, but also the manager outperformance, which, for a while we've had some lagging manager performance. So it's been good for the portfolio. Go ahead, Linz, turn it back over to you.
The international equities, the March 31st market value was $9,463,418. That equates to 20.27% of the portfolio. For the 3-month time period, the international equities were up 1.09%. And for the 1-year time period, they were up 58.55%. So halfway down the page, fixed income. which equates to 22.2% of the portfolio with a market value of $10,360,917 on March 31st. The fixed income portion of the portfolio was down by 2.85 for the 3-month time period. And for the 1-year time period, the fixed income was up 7.01%. Inflation protection and alternatives, which includes both void funds and both Longford litigation funds, that was $4,079,673 of the portfolio, which is 8.74% of the portfolio. For the 3-month time period, the alternatives were up 2.01%, and for the 1-year time period, they were up 7.44%. The cash equivalents of the portfolio are $1,554,972. That's 3.33% of the portfolio, and those were up about 0.13 for the 1-year time period. Any questions on any?
I'll just add too, if you look at the net cash flow, you could see where we've added to kind of over the last quarter. So you can see we've added to, which is what we talked about, to developed international and also emerging markets. So we were really able to capture kind of this last rally here in some of these markets, which we had some pretty big moves. And so where we took stuff out, we took a little bit out of this larger style box here, and that went into emerging markets and international. So it seems like it was a good trade-off there, adding some more to international markets. And then I'll just touch base on, here's obviously the corresponding benchmarks that we're looking at here for the benchmarks at one of them, and then the other is the 60/40. And then I'll just touch base on the policy to make sure that we're in line with all our policy ranges. So you can see here that across the board with all our allocations, we're in line from a fiduciary point of view within the IPS. So we have everything's within line. We have a little, some underweights, some overweights, but you can see here that everything is in line with the policy. Here's kind of some of the changes in the asset allocation. This is a little busy slide. And we always put this cash flow page in here so we can see where the cash flows are in terms of the portfolio. And I'll just touch base on kind of one last page here. You can see here's the write-up on the portfolio. So we ended the quarter with about 47 million. And then when we look the fund, we can see where our overweights were. We don't have any managers on watch right now because all the managers have really kind of outperformed over the last quarter plus. And then as we go to the attribution page, you can just see some of the attribution. So, where did we add value? Where did we lose value? The allocation, and then the manager selection, which I talked about. So both of these things added a bit of value for the portfolio. So I'll just pause there, and then if anyone has any specific questions or wants us to go through any specific investments, I'm happy to do that.
Well, I did have a question for Maria. I noticed on the slide for 2020, the town contribution was a little light, and I'm wondering if that was just a timing issue or something else. Right there?
Yeah, that is
You
a
know-
timing issue because as you know, I think that was December 2020. And I think we talked about it last time. I think the payment was made, and I'm looking right now, it was made in January, I believe. Hold on.
Oh, okay.
I think there was an issue with the timing. Wrong here. Yeah. Well, 12/31, and I think probably it wasn't captured by Burns' report because it probably didn't clear Wells Fargo till later.
Okay.
Yeah,
Do you remember-
right, Maria. Sorry.
That's okay.
I mean-
It was $1,305,000.
Yeah,
That's
we
why.
got that, and then I think like within the first 5 days or something, maybe we got the other funds, but they were earmarked for 2020, but we just book them when we have them in the portfolio. So whatever.
Yeah, that's why the first quarter of 2020 is showing 2,661,000, which is, we pay 1,330,000 per quarter, 1,335,000.
Okay, good, thank you.
Yep. Oliver, can you, or Lindsay, can you go back to domestic and the international? You mentioned total plan for domestic was, the 3-month was 8.53 and 1 year is 63.24.
Yes,
Is that correct?
yes,
Is that high?
yeah.
The same thing with international, just seems like,
Yeah, international is a little less. It's 1% for the 3 months, and then about 50, a little under 59% for the 1 year here. But it's also, Maria, too, it's a good question. It's coming off the low of March. So after the big sell-off, the market's just on average, let's say it sold off 35-ish%. So really, they're just going from being down, call it 35, to getting back or above
Okay.
even from where we were. So, you know,
okay,
it makes sense from the trajectory of where the markets were, because March is kind of the bottom that, you know, maybe a week into April, but March was pretty much the big sell-off where everything stopped and, you know, the pandemic just hit. So,
okay.
yeah, and if we look, I'll just go back quickly to this so you can take a look. If you look here, kind of across the board too, I mean, the US is up 60, but excuse me, some of the smaller stocks are up, you know, almost, you know, 90+% ish. So yeah, it's pretty crazy when we look at the numbers, which is kind of, you know, the one yellow light I was talking about. You know, the stocks keep going up, but, you know, I get nervous. I don't think they go up forever. So, you know, that's one thing we're kind of looking at with these big return numbers and how long this is going to continue. Did that answer your question?
Yes.
Okay.
I just had a question again, the Longford Capital Fund 3. I'm assuming, you know, what's our commitment to, I mean, we're still building that, correct?
Yes, correct. It's 2 million, I believe. I don't know why
Any
it's not.
sense as
I'll
far as-
add it. It should be next. It should be next to where this one is. You see here, it should be next to it. I'll have JR add it. I don't know why it's not there.
Okay. Any sense of timing as far as getting to that point?
You know, there. I think a little bit just on the Fund 3, just the whole COVID thing slowed down the, you know, investing in some of the cases and being able to really dig deep into it. I would expect that they're going to start calling, you know, this year, you know, especially the mid to the second half of the year, a bunch more capital into the fund as they have more opportunity as the, you know, economy opens up. And I'm sure there'll be some cases that are coming out of this, you know, post COVID to see what that looks like. But we don't have a specific timing. They've kind of been calling chunks quarterly. But, you know, Fund 3, they really haven't called that much across the board. I mean, Fund 1, which we're not in, they just they're fully invested. They finally got fully invested in that fund. Fund 2, I believe that's something like 80. Lindsay has it in another report. We're like 80+% invested in Fund 2. So I'd imagine just naturally they're going to start calling more and more into Fund 3 as they fill up Fund 2.
Okay. Thank you.
You're welcome. Yeah, and we're still waiting on kind of updates in terms of pricing on those portions of the portfolio, but everything else is fully priced in the portfolio. I don't have anything else, but, you know, obviously,
Well,
from
I read Longmont's report there, but I'm frankly a little confused by it. John Oliver, would you just say that's performing as we thought it would, and it's a valuable and a good investment? Could you just comment a little bit about your impression of it?
Yeah, so the thing with any of these types of funds, the way they're structured and kind of where they call capital, what we tend to see is in the early years, they're calling capital. And I would just think about it the easiest way for me to explain it is I would just think about the structure of these funds and then I'll answer how it's doing. Just the structure of the funds. It's like when you invest in real estate, you have to take capital, you buy the house, you put in improvements, you put in more improvements, maybe you rent the house, then you sell it, right? So a lot of the return is on the back end. So it's much similar to the way you see with the Longford Fund. You could see here when we look back to July of 17, when we started, the first $100 net of fees or whatever, for example, are at 1.36. But as we've gotten more and more money into this plan, you could see that at the 3 years, it's compounding about 15% relative to kind of fixed income and international equities. That's tremendous. Relative to US stocks, it's pretty good too, but US stocks are about 1% ahead of that. So I would say, for us to have basically no, call it, or very little equity like risk and get almost a full equity return of the S&P, I would say that's exactly what we wanted, probably better than we expected. I think the realized gain on investments in the plan are about 60% right now. So anything that's been sold or realized, we've made on average 60% on our money in the thing. So we're up a little less than the S&P, or call it 100 basis points or so less than the S&P, with 10% or 15% of the risk of the equity market. So even, for example, when these funds got priced in March, they really weren't impacted at all by COVID, other than maybe some of the cases got pushed out longer or whatever. But in terms of the actual underlying investment in the structure, there was really no negative hit to the portfolios. So that's why they're there. But
Okay, well, that's helpful. Thank you.
yeah, also I know Lindsay has a report she sent out, and there's a 1-page fact sheet that kind of breaks down. I'm happy to go through it if anyone wants, but it really breaks down the cases, how much has been realized in the cases, where we are from an investment life cycle. But in this fund, we're about close to 4 years into the life cycle of the fund. So really what we're expecting now for the next, call it 3 to 4 years, other than a couple more cases to be invested in, where we should be getting more and more realizations on the investments that we currently have in the portfolio. A lot of them, unfortunately or unfortunately, we invested and we got realizations pretty quickly back. Usually you want to have more and more money when you're getting big returns like that, but it's just the way that some of the cases worked out. So they've been returning capital and investment capital along the way, that cases that have been realized. So it's really going probably better than expected, if I had to say. I would say if we got half the returns of the equity market with 10% of the risk or 20% of the risk, that'd be extremely good. But to get basically 95% of the upside of the market with very little to any equity risk, it's pretty good.
Okay, thank you, John Oliver.
Welcome, everyone.
Yeah, John Oliver, could you just quote what their net IRR is on Fund 2 now that it's fully called and everything? What are they running at right now?
The net IRR is 11.8%.
So that's starting to come up. It starts off lower, because they're spending a lot of money to pursue these cases, and I believe we would expect that IRR to keep going up as we go through time, but it's already getting a lot better than Fund 3 at a negative is where we started in Fund 2, as I recall.
Yeah, and Jim, welcome. I didn't see it in the screen here. and also what we're going to see too at the end of the life cycle, this will, if the fund has a great return, this will be good for Longford, good for us, but we'll also get back all the performance, or sorry, excuse me, we're going to get back all the management fees. Well, first we get back our committed capital to $1. Then we get back our management fees. So that'll bring up the IRR in theory. And then if, obviously if they have a big, huge return on the portfolio, which is what we want to see, they'll take 20% of that profit above 8%. So that'll generally bring down the gross versus the net IRR. But to Jim's point, this should be coming up as investments get realized and as we're getting our capital returned to us in the later stage cycle. And then I could actually
And then Boyd Watterson funds, they still have a good yield on them, or have they come down like everything else?
They haven't come down as much. The state fund is a little better in terms of the yield, with arguably maybe a little more risk than the GSA fund. I'm just going to try and share this with you guys.
Because that's really what we expect to get out of Boyd Watterson is the yield, right?
Yeah. I mean, I think the goal and the target there, and this will be a discussion as at some point if rates ever, substantially increase. But, we're expecting out of the GSA fund, call it 7.5 to 8. And then out of the state fund, more like 8.5, roughly. So sorry.
Again, with very little risk and not,
Right.
the interest rate sensitivity that you have in, like a government bond fund or something.
Right. It's been a good trade-off, obviously compared to equities, it hasn't been a good trade-off, but it's been a good trade-off relative to fixed income. So this was the sheet I was referencing, so everyone could kind of get an idea of, fund 2. And this was what we were just mentioning, the gross versus the net IRR. And these should be coming together more and more, but this kind of has all the multiples on what we've been realized, the breakdown of the portfolio. So it's a nice snapshot to look at so everyone could get an idea of the portfolio.
But this is just through Q4s. They don't have Q1 out yet, right?
We didn't get Q1 yet. So it should be actually a little better than this. The IRR should be, the net should be a little higher, kind of based on what's happened within the fund. But this really has a good summary of what's going on here. And then what we're looking like for life cycle. And then, as I said, I would imagine as we get to the end of second quarter, third quarter, and into the latter part of the year, that they're going to call much more capital on Fund 3. Does anyone have any question? Everyone should have a copy of that. I think it went out with emails as well as some of the financials on Longford and the performance numbers on the both Boyd funds. So everyone.
I don't think I didn't see that Longford report that you just had up there. Did other people get that, or?
I did see it.
Okay, I'll look for it.
Yeah, there's also the Boyd ones are in there as well. I think we have
saw a bunch of those too. Yeah, but they're not in the packet. They're in those other attachments, right?
Yes.
Okay.
I'm not sure.
Any more questions for John Oliver, or is there anything else you wanted to add, John?
No, just, obviously, thanks for the support. I think, really the last, coming off the lows there, off the last year, we've really been able to get some more money into the equity market. So that's, helped the portfolio really from that bottom of the market in March till today. So that kind of 1 year time period, we've been able to, capture some more of the upside relative to the blended benchmark, which is about 70%, no, maybe more than that, about 70% in equities. And, some of the things I think that have helped the portfolio back a little bit, we have about 8 or 9% kind of in some of the inflation and protected things, that 8 or 9% generally probably would have been certainly in the short term better in equities. But, when we think about through time and space, hopefully those will continue to perform and ratchet kind of at a consistent level when equity markets, if they do falter. So that's probably the one thing I would add to that. But other than that, we really have some improvement out of the managers, which we had a little lag on a bunch. And then, we also got kind of the allocation pretty close to fully allocated. So.
Okay. Any more questions? Well, John, Oliver, and Lindsay, thank you very much for your presentation. You're welcome to stay and listen to the rest of the meeting. But I guess the next item on the agenda will be the retirements, approval of pension benefits. And if we could turn to the schedule listing the individuals that have retirement applications in. I did have one question, and if anybody else has any questions, go right ahead first. Well, my question has to do with Elaine Hammers. I see she terminated in '02. And my question is, was she vested or not?
No, she was not vested. And
So,
those
so
funds
we
should have
have,
been returned.
okay, well, that was, okay, so you guessed my question. I'm pretty sure we had a policy where people should have had their monies returned to them with, I think, 60 days. And we're paying 5% interest, so that's pretty
Yeah.
good yield right now.
Well, I think, as you know, there was a turnover in the department. So, when someone leaves, it takes time to just get together and review all the files
Okay.
and determine which ones needed to get their contributions returned. And I think
Okay.
Phyllis has been trying to go back, and she went back like 5 years, and now, you go further and try to address that.
Okay,
We're trying to clean up the contributions.
okay, well, that answers my question. Anybody else have any additional questions? Well, if not, can I get a motion to approve these pension amounts?
So moved.
And a second,
Second,
discussion, questions? All in favor? Aye.
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 Opposed? Abstained? It's passed unanimously. Okay, I guess the next item is the letter to the first selectman, which is so long ago I could hardly remember it, but it looked like it was well done. Did everybody have a chance to read it? And if not, we'll take a minute and just look over it again. Well, I don't have any
What about
changes.
what about the letter for last year? Are we working on that?
Well, that was my next question, Jim. 1 year at a time.
We can bring it up to the next meeting.
Yeah, so this one was, we can blame this one on COVID.
You need to
But-
approve this.
It's too bad because it's a pretty good report. I remember the previous one, when we had some losses, I had to face the town council. That wasn't pleasant, but we got through it. I'm still here. So if it's satisfactory to you all, can I get a motion to accept it so we can transmit it to the first selectman?
I'm sorry, Jim, were you talking to me? Phyllis came in to make.
Oh, no, I was talking to everybody in general, unless.
All right,
anybody has-
I'll move that we accept the report for 2019.
Okay, and is there a second?
Second.
Okay. Discussion? All in favor? Aye.
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 Opposed? Abstained? It's unanimous. So I guess, Maria, you'll send this to the first selectman and she'll forward it to the town council. Is that how the process is?
Yeah, so they're just having the May meeting, so we'll probably go for the June meeting. Will you be available?
Yes, I'm not going anyplace.
Okay.
Trumbull resident for life here.
And then the next meeting will bring in the January 2021 report. I
Okay.
think we were behind on a couple years.
Okay. And now we have the minutes of the January 26th meeting, which I thought were well done. And one question while I'm reading this, I guess Brad Fisher's in the process of doing the evaluation, the actuarial evaluation.
Well, it's done. That's why we can do the report.
Oh, okay, all righty.
Did you need him to present it?
I don't, unless there's something we need to know. I think we made the right decision, changing a little bit of the investment to 7.25. And with all the people dying, I'm a little nervous about the tables.
Well, we kept the mortality tables the same, but we
Right.
will have to address it probably the next valuation.
I just had one trivial typo or whatever in the, where it says election of officers, the last sentence. It says, and it's now time to give someone else a chance to serve. See that little glitch?
Oh, yeah.
So
just-
other,
Is the date correct on here? Is it supposed to be dated January of 2020?
21,
Mhm, that's a good catch.
very good catch, Donna.
Well, I'm reading it and I'm reading about October and I'm like, wait a minute.
All right, that's a good one. So I got two minor items.
Yeah, it says that we're going to review the 2020 letter at the next meeting, but I guess we're pushing that back another meeting now.
Well, that was a 2020.
I thought we just went over the 2019 letter.
Yeah, I
Okay.
thought,
Yeah,
Yeah, Jim, we're one behind.
yes.
Yeah, because I thought we had already reviewed 2020 last meeting. Just confirm.
yeah, we did, but it wasn't officially
Okay.
approved, so that's why it's there.
Yeah, I think we needed some numbers too to flesh out the report.
Right, so whatever happened to that? I guess we're gonna wait till next meeting is what we've said.
Yeah. And while we're talking about the next meeting, let me just mention, is it July 27th, the next meeting?
I don't have my calendar.
I think it is, if we could just confirm it's July 27th, so we have no confusion.
July 27th is a Tuesday.
Phyllis
Correct.
just confirmed. Phyllis just confirmed. It is July 27th.
Okay, perfect, 7 PM. Would it be nice to have a meeting in town hall instead of Zoom, but who knows?
Yeah.
Maybe.
So other than the two items on the minutes of the date and adding someone instead of some, are there any other amendments? If not, can I get a motion to accept the minutes with the changes?
I'll make a motion again since no one else is.
Way to speak up, Jim. Second, please.
I move to accept the minutes with the, as modified, as changed.
Second. I'll second.
Donna, okay. Discussion? All in favor? Aye.
Aye.
Opposed? Abstained? Unanimous? And I believe that concludes the agenda. We have clarified that the next meeting is July 27th at 7 PM. And I guess when Phyllis has the draft of the 2020 letter to the first selectman, if she could circulate it so that we could add any suggestions and thereby approve it at the July 27th meeting, if that makes sense to me.
Yeah. Yeah.
Or
we'll
maybe,
have that.
honestly, we could perhaps approve it by email so that you could present both letters at the same time. I just think it would look a little better.
I like that idea. That makes a lot of sense to me too. Do you think that's possible, Phyllis, or?
I'll work on it. I'll work on the letter.
When is the
Okay.
meeting?
July
No,
27th.
the next town council
The
meeting.
town council meeting.
It's June, the beginning of June, whatever that first Monday is.
That's the first Monday would be June 7th.
Yeah,
Yeah, because I think the town council would like to see more up-to-date information.
Okay.
okay.
Well, if you'll send that out, Maria, so we can comment on it and
Yeah,
then maybe we can do a special meeting to vote on it.
okay.
Do a quick Zoom meeting, I guess.
Yeah.
Yeah, we could do that.
Okay, this was a good meeting. Is there anything else we need to add or talk about? The town budget was approved or is going to be approved?
It was approved by the Board of Finance last Wednesday, and it's now going to the town council. The town council will meet on the 20th or 21st of May. And I believe they have to vote by the 26th.
And the amount of money that's going to be funded into the pension fund is, you know what the number is?
Not at
Only
the
if you
top-
know.
Not at the top of my head right now.
But they're meeting the ARC.
Yes, we're meeting the ARC. I just don't have the dollar amount in front of me. Actually, I do. Hold on.
That's the main thing that they keep sticking to, the commitment to.
Well, that
the-
was also the reason we held off on the mortality tables right now.
Yeah,
So the ARC and what we're contributing is 5,299,000 to the town and 3,257,000 to the police.
Okay, that's a lot.
It's a lot.
well, you said that we're doing 1,333 per quarter right now.
Yeah.
So aren't we going down a little bit in the contribution then?
I think, well, the thing is last year, was it 2020 or 21?
Anyway, it's basically the same.
Yeah.
Not changing much. But yeah, it's good that the town is sticking to its commitment to fully fund the actuarially required contributions so that we can continue to plan to meet our obligations over the life of the pension.
Yeah, that funded ratio keeps increasing, which is good news.
Mhm.
So it's about, I think when I started on the board, it was like 25%.
That was low.
I have the revaluation because I was just working on this. The town is, where is it? At June 30th, 2020. As of July 1st to 2020, it was 44.7% funded,
Good.
compared to 41.1 in 18 and 38.3 in 2016.
A steady growth.
Yeah, as long as the market
Yeah,
stays friendly, we should be okay.
yeah.
Well, all right, it's a good meeting. Anybody else have any additional comments before we draw it to a close?
Mhm.
Okay. If hearing none, let's see.
So will Maria send us the letters? Will that be distributed, the letter to the first selectman?
Yeah, that's what I understand. Maria's gonna flesh it out with Phyllis and they'll email it to us. Then we can
Yeah.
add our comments and then we'll get it back and we'll try to get a consensus approval and then we can do both letters at the June town council.
Okay,
Yeah, that's a plan.
So my iPhone here says it's 7:55 PM. Shall we use that time to close the meeting? May I have a motion to adjourn?
motion to adjourn.
Yeah,
Save Jim,
way to go,
save
Pat.
Jim, save Jim.
Second.
Way to go, Pat. Take the lead. Second, please.
Second.
All in favor?
Aye.
Opposed, unanimous? Okay, committee, thank you very much for your efforts this evening.
See you in
Thank you.
July.
Thank you.
And stay
everyone.
safe. Stay
too.
safe.
Bye-bye.
Bye-bye.